watcher glitches. So I wanted to talk about programmable banking, programmable money, and decentralized finance. Yesterday, I had a really good conversation with early investor in Bitcoin, pretty clever chap who now is investing in a number of different businesses. And I just wanted his opinion as someone who has been in this field for quite a long time and who's a savvy investor and by all accounts very intelligent individual. And I shared with him the diagram that I've been working on, which is on the Twitter account and which I went over the other day in another YouTube video, where I'm trying to figure out at this stage what opportunities lie in programmable banking, programmable money, and decentralized finance, because I think there's something there. The question is what. So just to start nearer the beginning, programmable banking has been around for quite a long time now in various different guises. And it's essentially the concept of being able to automate using data from various sources, the operations that you would carry out on your bank account. Now, in the consumer field, that could be things like, as simple as scheduling payments, for example. We've all that capability has existed for years, but maybe something slightly more complicated than simply scheduling payments. Maybe down to the time of day, or maybe when some event or some trigger, some threshold has been met, then you carry out some kind of action. Now, these exist today, but it's mostly on the consumer banking side, as far as I'm aware. I'm not going to pretend to be an expert in this field. However, there have been many limitations on them, on the capabilities of programmable banking. And I think the three main limitations have been, after a certain number of steps, it becomes incredibly complicated to predict the outcome of cash flows from a bank account, which, as you could imagine, should terrify anyone who's responsible for the account, whether it's a personal account or whether it's a corporate account and a finance team and managing it, a treasury or chief financial officer would be terrified by the prospect of not being able to predict what happens after, let's say, 6, 7, or 8 steps of different kinds of events occurring and being responded to. The reason for that is, I think, the people who write these programmable steps are not engineers, they're not programmers, they're not from that kind of background. Essentially, it's the end user, or maybe it's the IT department of a bank. And while there's some very good people in IT that work in banks, there are some very mediocre people as well. And I would imagine if a programmable banking project didn't get let's say the A team involved, then things could go horribly wrong for that project in terms of development. The other thing I would imagine is that it's very costly, or has been traditionally very costly, to test programmable banking, especially outside of cloud infrastructures, but even inside cloud infrastructures. If you imagine what you would need to do, or what I would demand would be done if I was responsible for a programmable banking implementation, is to ensure that the programmable app or the programmable bank account was tested against live data for at least a 3-month period, and then some kind of stress testing, not ordinary kind of transfers in and out, but try and test edge cases, for example. And the breadth and depth of testing is prohibitive and expensive, especially if it's being done by each individual bank or tech firm that's trying to implement programmable banking. So I think these 2 steps have held things back considerably in terms of the complexity and flexibility of programmable banking solutions that are available. However, there are answers now, not least the application of AI in the design and development of programmable bank accounts and programmable banking apps that would reside on those accounts. And I think PaveBank has led the way there in terms of Simon VC, who is the CTO of PaveBank and an old friend. He embedded the use of AI in the at every stage of development and testing in the implementation of PayBank's programmable banking infrastructure and applications. And that's been a revelation to witness what that can do in terms of managing complexity. But also, as I said, if you're in the cloud now and you have an automated test harness, it's a lot easier, a lot quicker, and a lot cheaper to test the programmable banking app with live data. So you don't have to spend a lot of time synthetically creating transaction data. You can just use real live data and then focus on the edge cases that could be troublesome to deal with or pose a higher risk for the bank or the bank account, frankly, rather than the bank. But what's the benefit of programmable banking? Well, there's two use cases, and I was explaining this to the gentleman I was speaking to yesterday. There are the boring use cases where there's a lot of money involved. Don't get me wrong, this is a business. We're talking about automating all of the back office applications that currently exist in any enterprise. So your treasury function, your liquidity functions, your kind of things, your payroll, for example, managing balances, making sure, as I said, for correspondent banking, for example, that your balances meet the minimum thresholds, and when they drop, taking the appropriate action to source liquidity from anywhere that it's available. One of the biggest risks for larger banks and larger global enterprises is their treasury function, which is very manual and requires lots of people to check on every action that other people are taking out. And let's face it, that's a terrible situation to be in, because it doesn't matter how many people are involved in checking a process and approving it, that they can still be compromised. And I think there are some very large breaches that have happened in, let's just say, countries where nepotism is rife. So within these organizations, family members and distant relatives all end up in the treasury department, in the finance department, and essentially approve frauds, which go unnoticed for a very long period of time due to poor internal controls and audit. So it's a very real risk. These large institutions that have to manage liquidity globally and manage their treasury globally are at risk. And the element is, unfortunately, the human beings in the process of approving these payment flows. All of that can be replaced with programmable banking. So not only is it a massive saving in terms of kind of head count, but it's also a massive reduction in risk and compliance, and also reporting, because you can automate the reporting of all your treasury, liquidity, and back office functions to any regulator, because you don't know what a regulator is going to demand tomorrow in terms of reporting. And today, it's very reactive when a regulator decides to step into an industry and demand new types of reporting. That can be very problematic and take a very long time for institutions to respond to, which isn't good for the regulator and it isn't good for the institutions. Whereas a programmable banking app could be written, one could imagine it could be written by a third party that specializes in writing these kinds of applications, and made available to be configured and deployed to your bank account pretty much within a matter of days. As I said, these use cases are the boring ones, but there's a lot of money involved in them. So there's a business there that's worth pursuing. It would be hard for me to get out of bed in the morning to implement a programmable app that automates some treasury function for a retail bank. But someone can do that for sure. What really interests me a lot more is institutional decentralized finance and how difficult that is for institutions to leverage today. only a handful of institutions can leverage it, even though it's not bound by regulation. And that's really because the interfaces are so difficult. So I'll give you an example of a good interface for Flare networks. There's two types of, I guess, delegation and staking. You can delegate to a Flare time series oracle, which is like a decentralized way of getting price data onto the blockchain in a trustless manner. And that's very easy to do. I can use a Bifrost application to delegate my Flare to two different FTSOs, more if I guess I have more addresses that I'm delegating from, and I can begin to earn rewards really quickly and easily using that. It's slightly more difficult to get validation rewards on Flare. I did it the other day and it took me a number of steps. I know what I'm doing and it was surprisingly simple, but there's no way an institution that isn't quite doggedly pursuing DeFi would necessarily want to invest the time and effort in setting this kind of thing up. So it still is a barrier of entry, even though it's one of the lowest ones that I've seen. That could be resolved really easily with a programmable app applied to a programmable bank account. And further than that, because it's a programmable app on a programmable bank account, it can manage your tax as well for you. So however complicated the tax regime may be in terms of, making the purchases, liquidating those digital assets, staking them, the rewards, all of these things that we've been told is, especially in the US, is a tax nightmare to deal with. And the airdrop, famously Flare had the largest airdrop in history. And one of the problems was because the airdrop is still ongoing. It was staggered over 36 months. What are the tax implications of that for US entities that participate in that drop? Well, again, someone could write a programmable app that applies to their programmable banking account that can manage all of that, whatever the rules are. And, be a specialist. It could be open source. It'd be specialist writing this programmable app. It could be open source, so totally could be scrutinized by anyone. It could be deployed onto a store, so there'll be some checks that can be made on it, like barrier of entry, if you like. And then the fee structure is entirely up to whoever wrote the programmable app to decide. So there's competition. There could be more than one of these applications that can manage all of your interactions with DeFi. So for me, one of the really interesting ways of looking at programmable banking is that it is the UX UI for institutional DeFi. It solves that problem, which is a huge problem has dogged crypto since its kind of inception with respect to adoption, is the difficulty of custody, managing your keys, dealing with tax implications. Where do you store how do you secure your keys? Is it custodial, non-custodial, self-custodial? And I think we've made a lot of progress. There are some very good wallets out there now that help retail customers manage their crypto. And I think there's more investment going into that area. So we've come a long way since the early days of managing your 12-word seed phrase, like memorizing it being the best way of managing it, or writing it down on a piece of paper. We've come a long way from that, and I imagine that retail crypto will continue to get better in terms of its UX UI, driving adoption, reducing the barrier to entry to adoption. But what I'm really interested in is institutional DeFi and reducing the barrier of entry to institutional DeFi. Because for me, if we can get liquidity onto these various blockchains, then that is really when crypto wins. That's when banks that are not programmable and are not open to offering fully decentralized financial services to their customers will be left behind very quickly, I would imagine. There's one more point I'd like to make, which is programmable money and programmable banking and how do those two work together, or another area of where your imagination can run riot in terms of what can be done. And this space is huge. This is why I think I'm really fascinated by programmable banking at the moment, because the possibilities are almost endless. And like, where do you start? Where do you start with something like this? Maybe you do start with the really boring use cases that can save a huge amount of time and money, and make someone a huge amount of time, huge amount of money, if they get these automated programmable apps correct and deploy them. It's boring, but that's one way of that's certainly a way that they can add utility for ordinary institutions. But for me, I think the real prize is somewhere between programmable banking, programmable money, and institutional DeFi. I just don't know what that looks like at the moment, but that diagram that I'm putting together, I'm refining, that tries to capture some of the possibilities, especially with liquidity in things like the automated market maker in the XRPL, which I've been looking at recently. And I think that's going to be a game changer for the XRP community once the AMM comes online. It's going through a process of validation at the moment, or approval. And I have no doubt it will be approved. It's just a matter of time. But then you look at the spectrum of decentralized finance products that are becoming available, and how they're taking illiquid digital assets. I said illiquid is probably the wrong word to use. Let's say non-smart contract digital assets like Bitcoin, Bitcoin Cash, XRP, Litecoin, Doge, all of the OGs of the crypto space that don't lend themselves to decentralized finance. They're unlocking that liquidity, which currently is like 700 to 800, I guess, billion dollars worth of liquidity there, which will only grow. So with programmable money, most people think of that immediately as CBDCs, and the kinds of things that you can do there. The common use cases are when the state doles out benefits, it can target exactly what they're spent on. So if you're getting flood relief, you can't spend that money on alcohol. It's like whatever. If you're getting child benefits, you can't spend that money on buying crypto, for example. Programmable money, on a very dystopian side of it, is the state is essentially dictating what you can spend the money on. Although I'm in favor of programmable money just for politicians and state actors. It would be great if the citizenry could choose to revoke politicians' salaries paid in CBDCs because they didn't perform and keep their promises. So, there is a bright side to CBDCs. I think all state employees should probably be paid in CBDCs, and we should have a DAO comprised of the citizenry who is actually paying the goddamn taxes. So not ordinary citizens with voting rights. We can have a tier of the citizenry that's been taxed, who can decide if the state employees should get paid or not, or indeed what they can spend their money on if they are going to get paid. So there are some interesting kind of facets to CBDCs and programmable money, but I digress. I still think the use cases I want to deal with and the things that excite me the most are actually not the cost centers for programmable money and programmable banking, but the revenue earners. So what can we do in terms of programmable money to replace trading desks? You could feasibly have one or more programmable apps applied to a programmable banking account that provides yield. Is simply going to, with a different risk threshold, going to provide 5% yield to your bank account. And you can apply that and it will run off and figure out where the best automated market makers are, where the best sources of liquidity are, where the best sources of collateral are, irrespective of what chain they exist on. It could go using Flare networks, for example. The programmable app could query multiple sources of collateral to find the best rates of yield versus risk, and do all of that for you automatically. So there are some interesting areas. Anyway, it's 20 minutes, so thanks a lot for staying with this video this long, and see you soon. GoPro, turn off. GoPro, power off. No, it's not listening. See you later, glitches.